To answer this question here, the wheel strategy, it's an excellent option strategy. It's a little bit different from the covered call strategy. It's basically I guess you could say it's the inverse strategy as opposed to the covered call. So what we'll be doing is basically with the wheel strategy, we will be selling cash covered puts. So what this means is, say we have a position in Google stock, right? And Google is trading around 172 here. So the basically 170 is a very solid support level that Google may not go below for a prolonged period of time. It may not even test below 170. So to take advantage of the situation, what we could do is we could, and I'm using Google as an example, of course, we can do this with any stock, but what we want to do is basically just sell cash covered puts on on Google, and we can go out to December now. So if we look at our options chain for Google, and right now we're primarily dealing with options with the December options. So December 20th looks good. So what I would do with Google here is I would sell the cash covered puts, the 170 December 20th. Right now they're trading for about five and a quarter. That gives us about a 3% I guess dividend we could call this, because if we sell the cash covered puts here, we can get the 3% premium, and there is a good probability that by year end Google is going to be well above 170. My price target is closer to 200 by 180 to 200 by year end. So I don't think that you can lose with this strategy in a bull market too often. So I'm keen on the wheel strategy. We don't use it in the all-weather portfolio because it would complicate things a little bit too much, because we already have some the covered calls, and we do collars sometimes in the puts. I don't want to mix the wheel in there. It's gonna complicate things. But as an alternative strategy, it works really well. Okay. So I answered that question. Let's get to some more. I see we have quite a few people here. Yep, go ahead. Who's got a question?
Hey, Victor, good
Yes.
morning.
Good morning.
You posted a report about Baidu recently,
I did.
and yeah, and $80 to $90 was a comfortable price range where we can get in,
Yes.
and especially after the stimulus, the stock kind of took off,
Yes.
and then it fell down. Right. In 2025, you're predicting to be $182 stock, right? Are there
Should
any
be.
bumps between now and then that we need to navigate with respect to Baidu?
Okay.
In
Hmm.
your opinion, is it a buy and hold for long term, or is it going to be some risks in the intermediate?
Okay. So good question. I believe
So
that
if you can
buy.
respond to that, I appreciate it.
Yes. So, great question. I believe that Baidu is a good intermediate and long-term buy and hold. Um, Now, of course, we have to recognize the Chinese related risks as they apply to any Chinese stock, not just Baidu. So, these primarily include um, just basically geopolitical risks and the potential risks of I don't want to say a trade war, but so some sort of future trade tensions could present a potential risk. Now, I don't think these ADRs are at risk of being halted, or like what happened with the Russian ADRs. So the Chinese situation, of course, it's much different, and unless we see like a full-out war with Taiwan, which is a um, not a high probability event, I don't believe that there's a real threat to the to the ADR structure and how they trade. Now, as far as the the company-specific risks, Baidu has a lot of potential in many segments. It has the content with the IQY YI segment. It has obviously its core business search. It has a huge cloud business. It's big in in self-driving. It has like a Waymo style business, very interesting. Um, and basically, it's doing a lot of things in AI and things of that nature, and it's very cheap. Its market cap, it's really minuscule to the company's prospects. Now, the biggest company-specific risk is encroachment of Microsoft on its search business. So we should definitely monitor those developments. And as far as the stock going up and falling, this is like the typical, I guess, Chinese stock pattern lately. They surge, they spike because of the short covering and the brief optimism, and then some kind of not such great news comes out, and it kind of smacks the stocks down. So I mean, the not so great news in this case was the lack of specifics regarding the Chinese stimulus. I think that's still going to come in hopefully in the near future. So that could really bump the stock up a bit. And also the administration, really Chinese stocks did excellent during the Donald Trump presidency. So judging off that, I don't think that we should see a problem relative to the administration and Baidu. I hope that answered your question.
Thank you.
You're welcome.
I just want to hear does you really mean with a non-core position and a core position in portfolio? What's your yeah.
Oh, okay. So if I understand you correctly, your question is regarding the core positions and the non-core positions in the all-weather portfolio, correct? And
Yes.
what the difference is. Okay. So in my view, every portfolio should have some core positions. Potentially, if it's not like a massive portfolio, I think 5 to 10 is an adequate amount. So now, what differentiates core positions from the regular portfolio holdings is that the core positions they are the stocks that I have, I guess you can say, the most conviction in. So these
Yeah.
are the stocks that I have the most conviction in, that I think, are high quality, stable companies that have favorable backdrops and that should do really well as we move on in the short, intermediate, and longer term. And actually, with the core positions, I want to stress the intermediate and longer term perspective. Now, when we refer to the non-core positions, these can be riskier, I guess, in a way. We don't want to play with too much risk, but to put it simply, we don't want any crap in our portfolios. You know what I mean? Stocks that have the
Yep.
potential to like drop, go to zero. We obviously want to stay away from that, and I do my best to stay away from such stocks. Now, as far as the non-core positions, they can be a little bit riskier and typically have a higher risk reward ratio. So they don't have to be like the industry leaders or like the super mega cap stocks. These non-core positions can be smaller market cap, mid cap stocks that just have a have a possibility or a probability of doing really well. So they
So,
kind of and they can be
so
and we focus more on the short and intermediate term with these stocks, so we can kind of get in and out of them a little bit more than with the core positions.
it's kind of swing trading. You can say you take the way up and then you take it off again, and then that's
Yeah, I
buy it
would
later.
I would refer to it more as like longer term swing trading. You know what I mean?
Yeah.
Because I'm not trying to trade positions every few days or so.
No,
So
no.
we are making adjustments intra-quarterly, which I think is the smartest and the best way to manage an active portfolio. I don't think we should be sitting on our hands often, especially in an environment where there's volatility to take advantage of, because the volatility, it provides a lot of opportunities. So obviously, the way to take advantage of the opportunities that the volatility brings is to get in and out of positions a little bit. So even if it makes us a little bit uncomfortable, to do some trading, I guess is what is what we can call it. We have to do it sometimes because just buy and hold, it doesn't work. I mean, if you want to beat the market, you have to make some moves.
Yes.
So that's it.
The last example is a Soundhound, which go quickly up and then down again.
Yes, it's a SoundHound. It's a very wild company. It's an increased risk stock, so we have to be careful with this one. I like it a lot because it pays very high premiums, as far as CCDs go. So if you notice, I recently sold some covered calls against half of the position, and it brought in a really nice premium. So the stock is good to sell some calls on if it looks like it's overbought here or something, or you just want some extra
Yeah.
yield with this name, sell
Yeah.
some calls on it. That's
Thanks.
my advice. Yep.
Thanks a lot.
Cool. You're welcome.
Hi, Victor.
Yes.
How are you?
Hello. Antonius. Hello, my friend. Antonius
Hello.
and I, Antonius, let me just tell the group. Antonius actually lives. He's a Greek. He lives here in Greece, and I live here in Greece. And we actually met one time for coffee. And Antonius is a great guy. He's got a wonderful family. We had an excellent chat, and it was great. So it's good to see you again, Antonius.
Yes, thank you. Thank you very much. I'm also very happy to see you. I have no question, actually. I just wanted to say hi.
Ah,
And
good.
okay, if I have to ask a question, I will ask, how did you know for Tesla and Amazon just before the announcing of the profit of the Q3 earnings, and you advised us to buy, and then both stocks jumped like crazy.
Okay. Good question, Antonius. Thank you. So, different reasons for different stocks. So, with Tesla, I have a very high conviction when it comes to Tesla. I've been a bull on Tesla for a long time. I've been investing in Tesla for over 10 years since 2013. So I am very comfortable with the company. I understand it very well. I know their financials basically inside out. So it's the company that I know best out of any company in the world. So Tesla got really beat down recently, and the sentiment became so poor that it appeared that there was a high probability that Tesla could surpass the earnings. I didn't expect such a big improvement on profitability. I don't think anyone did. No one that I talked to, or none of the analysts that I spoke with, had expected such an impressive jump to a 19.8% gross margin, I believe, and also the operating expenses on the operational side uh, came down a lot also. So this shows you that Tesla is it can just crank its profitability up, kind of like Amazon does, or like a tech company does, which obviously differentiates it from any car company that I've ever seen. I've never seen a car company that can just make itself so much more profitable from quarter to quarter. It's incredible. Um, so it's just something that seemed like a high probability of occurring. So that's why I was so confident in Tesla. And in Amazon, it was more of a of a cloud of a cloud trend that I've noticed. Google reported really strong cloud business results, and then Microsoft also had really strong results, but like the guidance, the better guidance was kind of pushed out a little bit further into H2 2025. So that's not too bad. Now, obviously, AWS competes with these services, but it's the best service. It's number one. So I just thought there was a really high probability of AWS surprising, and Amazon just is a really solid company, and can also surprise. And we had some weakness in the stock ahead of the report, so that's also why I kind of thought that was a high probability beat too. I'm a little disappointed that we missed out on Intel. I should have we should have bought some Intel for the near term because there was a high probability of it moving to 30. So I'm a little disappointed in that, but that's okay because we have a lot of winners in our portfolio anyway, so we're doing well, and I don't think we should, we should be upset that we missed a play here or there. Okay.
Thank you, Victor.
You're
Again,
welcome.
very
You're
happy
welcome.
that we have you. And
Thank you.
see you soon. Huh?
Thank you, Antonius. Yes.
Bye bye.
See you soon, my friend. Okay. So,
Hi, Victor. It's Nikita speaking. Can you hear me?
yes, Nikita. Hello.
Yeah. Yeah, I posted a bunch of questions and not all of them you need to answer. It's just maybe something, but maybe my prime question would be, question number two. If you start like from zero, so I'm kind of, if I would to start following the AWP and kind of following the trades,
Yes.
how would I enter? Let's say I have, 1 million USD,
Yes.
and I would kind of, what would be my entry point? I mean, do I copy the percentages right away and then go from there, or what would be the way in? Thanks.
Yep. So I don't think that well, first I would consider focusing on maybe maybe not the whole portfolio at once, but perhaps pick maybe 20 or 30 holdings that really appeal to you that you could focus on. That I would also look at companies that you really like, that you understand well, that that you can see like a bright future with. So those kinds of things I would advise. As far as percentages, I don't think you need to have the percentages exactly like the AWP, but we can have you should probably have some core positions, some leading positions, like five or 10 companies. I would focus on those primarily at first. So I would go with something like Tesla, Amazon, Palantir, Google, maybe like AMD. I still like AMD. I know the stock, it's been underperforming, but I really think it can probably outperform in the future. I know it's not like a popular viewpoint, but I think maybe it can even outperform Nvidia over the next year. So I'm going to continue to to invest in AMD. So I would pick maybe like 5 or 10 companies, that you really like, that you really see a bright future with. Maybe incorporate a couple of gold mining stocks in there, maybe, like a good oil company or two. Maybe incorporate some of the uranium names on a bigger pullback. So we really want to be in the sectors that are going to be doing well in the future. We really want to be in the stocks that have, that have like the best opportunity for a best performing monopoly in the future, or a monopolistic style company or approach, whatever you want to call it. I mean, that's really what we want. So I'm looking at some of your questions here.
May I ask
Yes.
again?
Yeah, go ahead.
Yes, now you are very focused on tech stocks and especially AI stocks.
Of course.
And when these stocks are going to cool down, which sector industry group are you most interested in? I see retailers can also be a very good compounding business as like Nelly and you Coupang and some other also shoemakers can be a very good business where they make growing revenue and EPS. And then there are other kind of business or sectors where it's up and down and more cyclical. What are you going with when it's cooled down with the tech sector?
Okay, so good question. Again, we want to look for industries and companies that are going to be leaders, in any kind of environment. So obviously, we want to stay ahead of the curve. So recently, the tech sector has led. Of course, we've noticed this. We've seen this. Companies like Nvidia, Palantir, and then so on have done extraordinarily well because of the AI backdrop and all the other things that are happening in tech. I want to stay in the segment because I don't think that the tech run is over. I don't think that this is the time to kind of cash in your chips. No, I don't think this is the time because we are just entering we basically just started the new bull market in October of 2022. We are only seeing the beginning of the monetary easing cycle. So I mean, this could be a very long monetary easing process. These cycles are typically long term. So once the Fed starts cutting, it's going to cut all the way to zero. There's almost, I mean, in my mind, there's almost a 100% probability that the Fed will end up cutting to zero, and then it's going to introduce, or even before then, it can introduce quantitative easing at any time. Anytime the market runs into trouble, the Fed put is back. So I mean, with the Fed put back on the table, tech, high quality, high quality domestic stocks, smaller cap stocks that can grow, like the best quality tech stocks, the material stocks, in industrial stocks, gold stocks, silver. I mean, this is where you want to be. I think our portfolio is positioned very well for this upcoming monetary cycle. We want to look ahead, and we want to look, where the money is going to be. And the Fed controls the narrative. The Fed controls the economy, controls the situation. Of course, it doesn't control everything. We're going to have a market crash. We're gonna have another bear market. I'm not gonna say, when that's gonna be. We're gonna look. We're gonna do our best to spot it in
Yeah.
time. Like we did in 2021. I think we did an excellent job of identifying the top in the market. We did an excellent job of getting solid returns during the bear market, or we didn't lose too much money, that's for sure. Um, so it's all about spotting these patterns. When the market tops, there are clear indicators. Of course, it's different every time,
Yeah.
but we had clear blow off tops last time in 2021, and we had clear indicators in prior bull market tops. So we're going to do our best to spot these, but until then, we want to be invested in the best position sectors. And I still think that the AI segment, I think there's a lot more infrastructure spending that's going to come. We may be seeing like a temporary slowdown now, but that's normal. That's fine. We saw a big jump, so it's normal to see a little bit of a slowdown now. We can see a
Yeah.
reacceleration later. Once the easier monetary stance starts trickling down to the broader economy, we should see more of this tech run.
Yeah. Thank you a lot.
You're welcome.
Hey, Victor, can you hear me?
Yes, I can hear you.
Yeah, perfect. So I have a question on, I'm looking at the AWP portfolio. So you completely dropped CrowdStrike and Zscaler. Is it more on the opportunity cost of the no short-term runway, or you see something not so much of a potential in that segment?
Yeah. So yeah, with Zscaler, with CrowdStrike, I see no problem with these stocks. Of course, CrowdStrike had that unfortunate incident. Uh, while that is a big negative, that's behind us. The company has addressed it, and the company has done a good job, I think, of addressing the issues. CrowdStrike is still the market leader. It's still the best company in its space. I still like it. I got out of it because as you mentioned, of the opportunity costs, and I thought that the stock, it came up, it appreciated by like 50% or so in a very short time frame. So I thought it was about fairly priced at the moment when I got out of it. Now, I'd like to revisit the name at a lower price point. I don't mind CrowdStrike, Zscaler, I think it's a great company. I think it's fine. It's a little bit on the expensive side, but I also think it has room in a well-diversified portfolio, and I'm gonna circle back to these names and consider them in the near future also. I'm thinking about that. Nothing against
Thank
them.
you. Thank you.
You're welcome. Okay, so who else has a question? Oh, we have a raised hand from Joel. Joel, go ahead. Oh, maybe Joel was just waving to me. That's okay. Okay.
Hi, Victor. Good morning,
Yeah.
everyone. Yeah. Victor, great call on Palantir, great call on Snap.
Thank
And
you.
so I followed you on both of them and very happy with the results. We are able, our conversation about will it drop came into fruition over the last couple of days and took advantage of buying back my covered calls. But you made a comment yesterday that the premiums are pretty crazy right now for Palantir. And I had a look this morning and some of them are like 10%. I mean, some are pretty. What are your thoughts on that? As first question, and the second question regarding Snap, I wasn't able to offload some of my position to take some profits. I bought in Snap at around $9 and change, and so I want to take some profits on that. I wasn't able to yesterday, but I see it's kind of creeping up a bit before the bell this morning. And the second question is, should I probably take some profits today? Would that be a recommendation? I missed yesterday.
Yeah, okay. So good questions. So I think regarding Snap, if if you have a nice profit on the position, it sounds like, and it had a good report and the stock surge. So I don't see a problem in taking some profits. Now, as far as the amount, I would probably go about a third of a position, or maybe as much as one half, but probably I would leave at least one half of the position to potentially go higher, because I'll tell you why. Because of the good earnings report, now market participants are going to want to see what the next earnings report is going to be like. And in the anticipation of the next earnings report, they're probably going to bid the stock higher. So before the next earnings report, Snap may be at around, 13, 14, maybe $15. That's just something to keep in mind as like a possibility, because because of the higher expectations now. And basically Snap had a pretty solid report. I think they beat on the bottom line, they beat on the top line. There were some concerns about their profitability. They sued some of these concerns, and they also showed solid user growth. So I mean, that was really a good report. So yeah, we can take partial profits, but I would leave part of the position on. Now, as far as Palantir goes, also, of course, we've done excellent on the position. I beefed it up to the biggest position in the portfolio when the stock was only like $6, and then we've been taking profits at some places along the way. We've been buying back at opportune times. So we've done really well with Palantir. Now, as far as these big premiums, it's of course because of the Palantir earnings that are coming up in a few days. So the market expects a big move because the stock has had a huge move and the expectations are sky high. Now we could probably see like a 10 to 20% move in either direction. Which way the stock is going to go, time will tell. Of course, if it's a huge beat, we're going to see the shares fly, but we could see a sell the news event because the stock has come up so much. Now, if the market, if it's in line, or the market doesn't like something about the report, we could see like a 10% sell off in the stock, maybe even 15% or something. That would probably lead to a solid buying opportunity in Palantir. Now, how you want to play the swings, that's of course up to you. But I would consider um, potentially, if you have a big position, potentially adding maybe some covered call, putting a covered call on just to maybe take advantage of that big yield here on partial position, maybe like a quarter or something. But I would leave. I would also leave maybe at least half of the position here to go because I think Palantir has a lot more upside ahead. So I'm still bullish on the stock despite the big run up. I think it has the best product in the market and it's a very unique company.
Yeah, it could definitely run away. I mean, who thought it would hit 40? You know,
Yeah,
when I took out those covered calls at 39 and it just rocketed and I'm like, I don't want to lose my shares, but I don't want to pay
yeah,
such a hefty premium. So
right.
I think I'm going to wait until earnings comes out before I decide to do any covered calls. It's just my heart can't take it that much up and down. So, but thank you very much for your insights. We read your stuff every morning. In fact,
Okay,
sometimes I'm up a little earlier just to see what you're coming out with during the day. And so, bravo,
nice.
thank you.
Thank you, Joe. That makes it all worth it. Thank you, Joe. Appreciate it.
You're welcome.
Hey,
Okay,
Victor,
good.
we got a
Yes,
question for you.
yes,
This is Alwick.
Oh, sorry, Victor. Slava
Oh,
Ukraine.
yes, yes, yes,
so I guess the question I have is
yes.
on interest rates. I don't feel like you're that fixated on interest rates or trying to play them. I guess it's something that I'm kind of more interested in. I guess what's your thoughts on that? Are you trying to predict it or just sort of observing it, I guess?
I pay attention to them. I certainly pay attention to the treasuries and the yields. So my view on this is that you know they're obviously highly correlated with you know with the Fed policy. So with the Fed reducing rates, we should see rates fall. Of course, we've seen some stubbornness in the longer term rates in the longer end of the curve. That's been a little bit concerning. Now that probably has to do with or that could have to do with you know with the national debt and things of that nature. And but I think the Fed can solve this issue. It could take some it could be just you know just the monetary easing could you know just the lowering of the rates could solve this issue. And if not, I think the Fed can introduce some sort of asset buying program, perhaps even you know like temporarily announce an asset buying program that could hammer down the longer end of the curve. So I view that as a possibility in like a worst case scenario, I guess, because we really need these rates to come down for mortgages to become, you know, to become much cheaper and for basically just any sort of longer term rates to come down. So yeah, I view that and I think you know I'm a little bit concerned that the 10 you know that the 10-year and other rates have been stubborn up here. I like TLT as a play here because I really think that that the rates are too high and I think that they will come down one way or another. They're going lower.
Okay.
I have a question. Nikita here again.
Yes.
I looked also at your previous, portfolios because you post them like quarterly, and I just noticed that in the past you had much more ETFs incorporated within the portfolio. I mean, I haven't been that long with with your channel, your support. So could you explain? And also the range, the TT range
Yeah.
was much bigger than right now. Right now it's everything seven and five plus. In the
Yeah.
past you had like a lot of sixes and like the range was bigger. Could you explain on this, please?
Absolutely. So let's touch up on the TT score first. So the reason that most holdings, or I would say like all holdings, all current holdings in the all-weather portfolio are seven or around like, you know, seven or higher, 7.4 or higher is because I try to have only buys and strong buys in the portfolio. So if a stock drops to like like a 7 or lower, I automatically sell it now. That's been policy for like a few years now. Um, so yeah, of course, stocks go through cycles, and some become holds and even sells. So I automatically I just get rid of these much sooner. I don't sit on them anymore. Like in some of my initial years, I would like sit on a position and wait for it to recover. Like I could use maybe some of the EV stocks like a Lucid or a Neo. Maybe in the past, I would downgrade the stock to a hold, and I would keep the shares, hoping that it would recover or whatever. But then I realized that you lose more than you gain with the strategy because of the opportunity costs and just if a stock becomes a hold, I just remove it, and that's it. I keep only buys and strong buys in the portfolio. Now, regarding the ETFs, first we have a separate ETF portfolio now, which only has ETFs, and so this is part of the reason why we incorporate fewer ETFs in the all-weather portfolio. And another reason is because typically with the ETFs, they're not going to perform as well as if you pick like the best stocks in a segment. Now, there can be some there can be some cases where the ETFs are better. For instance, if we take the digital asset segment, like the Bitcoin companies. This is why I own the blockchain ETF, is because I believe that some of these companies are very risky, uh, or riskier than I would like, just companies to be in my portfolio. So some of these Bitcoin mining stocks, I don't want to own just like one or two companies. I would rather own the ETF in case, something bad happens to a company, like it would have a limited impact on the ETF. Whereas if I owned that one company, it could potentially decline to zero. So obviously I don't want that to happen. So that's why I would go with an ETF in that much higher risk segment. Another industry that I'm keen on to use ETFs in right now is the nuclear. We're seeing this nuclear boom because of all the tech companies and the other companies saying, "Hey, we're going to need so much more energy. Where are we going to get all this energy? Oh, we can have like little nuclear reactors, like little private nuclear reactors." I mean, that sounds crazy, but this is reality, and this is um, the most I guess this is the most economically and environmentally friendly option is for these companies to have their own nuclear reactors for their AI energy and other energy needs. So that's another segment that I would look for an ETF in instead of going with like a basket of stocks. I know I just initiated a position in Oklo. It's a high risk company, and but I'm really looking for like a more of an ETF approach in this segment as well. Now, if you're talking about like tech companies or the tech segment, you're much better off or in my view, you're much better off just picking like the top companies in that space as opposed to like going, with an ETF that has like 300 holdings or whatever, because of course that ETF is going to underperform the top companies. And I'm confident that I can pick the top companies in that space or whatever segment. I do like the gold ETFs as well and the silver ones, because also silver companies come with increased risk in some cases. And I like the SLVP ETF and some other ones because I found that the gold mining ETFs and the silver ETFs, they have a mix of really good companies at the top, and I like these also. So that's kind of like my view on ETFs. I hope that answers your question.
Yeah, thanks very much. It was more comprehensive than I actually thought. On the back of that, maybe it's just I don't want to take too much of your time, but the crypto part of your portfolio, you also have a lot of altcoins and some other. I mean,
I don't think
could
I
I
have a
just
lot.
simplify?
I have several.
Yeah. Um, do you think it's an acceptable option to simplify it with a BTC ETF, for example, rather than going into each of them or
Absolutely. I don't think there's any need to own any altcoins. I think these are absolutely optional if you wanna own them. These are how I view altcoins, I view them as higher risk equities basically. So like a higher risk stock, like a SoundHound or something. To me, it's very similar to like an altcoin. So these are the higher risk, higher reward plays. I mean, they're not necessary to have by any means. I think you're fine in the segment. If you want to participate in the cryptocurrency space, you're fine with. I think you can do very well with just with just BTC, ETH, or their equivalent ETFs, or you can go with the blockchain ETF for some diversification. I don't think you need anything else than that, to be honest.
Thank you.
You're welcome.
Hey,
Okay.
Victor,
Yes.
this is Ben again. One question about mining lithium. We have Albemarle in our portfolio.
Yes. Albemarle.
Interesting ride, right? Yeah, interesting ride in 2020, end of 2022. So it's all the way up into 300s, and now it's close to 95. And what is your long-term perspective? I have a bunch of stocks sitting in my portfolio. I am overweighted compared to your portfolio. Is it better we just be patient and wait for the stock to recover, or do you think it's never going to come back to the levels again?
Yeah, I think well, first, I think never. It's a very absolute term. So at some point, it's either going to go to zero or it's going to take out those levels. Um, so of course, a lot depends on the dynamics in the lithium market. So it's been challenging. So we've seen lithium prices really collapse recently, and um, of course, this has to do with some specific issues like the general slowdown. We had a slowdown in EVs. Like they thought that demand was just going to go vertical forever, and it didn't. What a surprise! So they mine too much lithium. This is basically the lithium situation in a nutshell. I'm gonna try to sum up here. So these lithium miners started producing way too much lithium. Chinese lithium miners came online also and helped produce way too much lithium. So basically, we have a lithium glut, and the market is still working its way through it. That's why the prices, collapsed because there's just way too much lithium in the market right now. How do we solve this? This resolves only over time. It's going to be resolved. The market, always resolves these issues, and this issue it should always also be resolved. EV demand it's gonna come back. It's gonna be stronger than ever in my view. So lithium prices should recover. We've already heard announcements, of cuts in the lithium mining space because, of course, companies need to see higher prices for them to be profitable. No one's really making money with lithium at these prices. So, I mean, markets have a tendency of correcting themselves, and the lithium market, it's not any different from any other market in my view. So it's going to correct itself in time. How that's going to translate down to Albemarle stock price, very likely we're around the low point. Whether the low point it's here or it's at $80, or maybe in a worst case scenario, it could maybe briefly drop below $80. This is possible. Is it likely? I don't know. Maybe we've seen the bottom because we saw that we saw the takeout Arcadium Lithium, and that was my favorite lithium company actually because it was just such a great mix of the two companies. It was excellent. So I think Rio got just a great deal with while everyone was sleeping on lithium. You know, it really it purchased the company for like 6.7 billion, but I think you know it really got a great deal. So Albemarle, I think you know if the stock moves lower, it's gonna become a take you know it's gonna become a takeout target. It could be a takeout target now because really the market cap it's not that big on Albemarle. It's the biggest lithium miner globally, and Rio is not the only you know huge mining company that's looking for exposure you know to lithium in the future, and it's looking for exposure to lithium. Uh, for a reason, and that reason is not because lithium prices are going to stay depressed forever. It's looking forward and it's seeing that the likely trend, you know, is higher, and you know the stock prices should appreciate in time. So that's you know that's where I see Albemarle going. I think it's going to go higher. SQM is also a good stock in this space.
All right, thank you.
You're welcome. All right, so let's move on to another question. We have a lot of people here. Don't be shy. Whoever wants to can just go ahead and ask, and we'll keep this discussion going. Okay. So
Victor,
yes.
what, oh, sorry. Just
ahead.
one quick question. The cryptocurrencies, we've done pretty well. I dumped all my Doge,
Mhm.
but I still hold on to DOT, and that's been a real underperformer. Would you be able to tell me why DOT has done so poorly? I mean, it's sub $4 now. I think we picked it up in the summer at around 6.
Yeah. I've been looking at it also, and I've been thinking, and I've noticed this. Yeah, it's been underperforming, and I think maybe we can, you know, if it doesn't start moving soon, I think maybe we can let this one go because it's you know it's one of the biggest cryptocurrencies out there. So it's not like it's like a little altcoin or something. It's you know it's like a massive blockchain. So why has it underperformed? Perhaps you know it's a fintech cryptocurrency, so perhaps you know the applications that you know that we've been kind of expecting out of it are just not as widespread right now. So perhaps that's why the demand has been kind of lackluster in dot. I don't see like any you know any systemic issues in it, but I think due to this underperformance, you know, I think we can let this one go. So I've been looking at it and I've kind of you know been asking myself why you know why it's still in the portfolio. And I think, yeah, so that's a good point. I think we can let this one go if it doesn't get going in the near term.
Great. Thank you.
Yep, you're welcome. All right, so we have a question here. In the days before the election, do you recommend buying favorite stocks expected to perform? Hmm. That is a good question, and you know what? Here's my view on the election. I think we're gonna have like a transitory volatility phase where we're already seeing it. Like we saw it yesterday with the sell-off, you know. So we're already seeing this kind of election style volatility. Today, the market it's looking better, but you know, I think in the next few days we can have like a spike in the VIX, and but I think after that the market is gonna go higher. So I believe that we should be looking for to add to our favorite stocks. Hopefully on a bit of a pullback if we get a volatility spike here in the near term. Hopefully on a bit of a pullback if we get it. We can pick up some more of our favorite names, you know, if that pullback you know doesn't materialize as we you know as much as we expect. I think we can be looking at these names now because I believe the market set itself up to to go through a bit of a volatility phase now, and then that setup should take us higher into year end. I hope that answers your oh, that's the question that I read, of course. I hope that answers your question, Mr. Saad. Okay. And it does. Okay, good. So, more questions. Let's see, we have a question here. All indexes have come down to the 50-day moving average. We were due for a correction. Historically, election year, November in the US is very good for equities. I agree with your 6,000 SP 500 view. Good. So yeah, I mean that's kind of like what we were talking about. So of course we're constantly monitoring the market for pullbacks and corrections. We had a really good solid correction in July and August where the market really gave up I think the SPX gave up like 10% and the Nasdaq almost gave up 20 and many of the top stocks, of our favorite stocks had deep corrections, 30, 40, 50%. So I mean, that was like the correction that we were looking for. We got it, that's good. So now I don't know. I heard people talking about another correction, like big corrections. I don't think that's going to happen. It doesn't make sense to have one big correction and then like another big correction right after. It makes no sense. So again, we had the big correction. Now it's time for like a minor volatility phase. We're seeing it. And I think that, once the election passes, we can have a solid run up into year end. So that's kind of where I'm at there.
Victor, one quick question.
Yes, of course.
If I have to choose between NVIDIA and AMD at this point to pick up more, what
Yes.
would be your recommendation?
This may be an unpopular viewpoint, but I'm gonna say AMD. And the reason I say AMD is because it has underperformed and it's underrated and it's unloved and everyone thinks it's not, it's the underdog here and it has an amazing product and it's getting more and more demand and I think it can show that it can gain more share in this market and also in Nvidia share I think it's too high.
Yeah.
It's the market's too big for just one player to dominate. I think AMD can gain some traction here, take some market share from Nvidia.
So you're probably
Do you see
leaning
anything?
AMD.
Sorry.
I'm sorry, go ahead with that follow-up.
Yes.
Yeah, I had a quick follow-up. So in that context, in AMD's earnings report, do you see anything that is not desirable, or is it more of a market overreaction?
So, as far as the report, so I mean, for the most part, it was a good report. All right. So, I mean, that's the bottom line. So, where the growth counts, AMD showed that it has growth. The growth really counts, in data center AI. These are the segments that really matter right now. These are the segments that everyone should be focused on. And 122% year-over-year growth is massive. So, I mean, the market can complain all it wants. It can it can sell AMD off in the near term, but that it doesn't change the fact that that where it counts, the growth is there. Now, as far as the underperformance in the gaming segment, okay, but we saw underperformance there, and but I don't think it's a big deal because that's not the segment that people should be most focused on here. As far as as the guidance and everything like that, so it was 50 million below the consensus estimate. Of course, by now we would prefer that the guidance would be better, that it would be, that it would come in like whatever 100 or 200 million above the consensus estimate. Of course, this is preferable. This is what we want to see by now. Arguably we should be seeing this, and the reason we're not is because there are some issues, execution issues on AMD's part, perhaps. So I mean, they're a little bit behind NVIDIA. We know this. Their new AI offerings, we had a little bit of a delay, but I think that we can make up for this in the future. And I don't think that this is just wishful thinking. I think that AMD can provide, can meet the demand. It can improve production of its AI offerings. It can, these are all doable things. It's not, there's nothing here that's like extraordinary. Um, the demand is there. It should stay there. It's not like the demand is gonna disappear. So really, I think the environment is favorable for AMD, and I think it's underrated. I think there's a much higher chance now of an outperformance of a better than an anticipated result next time. So I'm gonna stay long AMD here. I believe that they can make up for this past quarter, and then if not, we'll consider selling them.
Thank you.
So who else had a question? I saw someone with a question. Yes.
Hi, Victor.
Hello.
Thanks for your service. It's really awesome. I have,
Thank you.
at least I can say that in the last 2 years, yeah, I have benefited significantly. Thank you. So one question I have is like, I mean, I think of selling some puts like often, like when you recommend some stocks, probably I think of selling some puts based on the market price, like 20% below of it. And some of them I do execute, and yeah, I get some profits out of it. But how do you see in the long run, like selling puts, is it high risk, or what's your opinion on selling puts?
You're
I
referring,
know like the
y-
profits are like won't be much bigger, but at the same time we are reducing we are selling at the lower price. Probably it feels safer, but I want to hear from you. How do you see it?
you're talking about selling cash covered puts, yes?
Yes.
Yeah. So I think this is an ideal strategy in a bull market. I think it is an ideal strategy to sell cash covered puts, and the best place to sell these cash covered puts, the absolute best place, is during a high volatility market turmoil kind of correction style event, like something that we saw in early August would be like the ideal time to sell puts. So there are several reasons for this. One because you're going to get the best price basically because the stock has decreased substantially. So there's much less risk of you having to repurchase the shares. Then you're going to get the best price for selling your options because when the volatility spikes occur is when the options premium skyrockets. So say there's like a high volatility event and whatever, like stock like NVIDIA drops down to 100, and you go ahead and sell those and the stock is like, and then you go ahead and sell like whatever, like the 95 dollar puts, you're going to get like a huge, maybe like a 10% premium for that because of the increased volatility. So that's why I'm kind of putting an emphasis on that fact. But generally, selling cash covered puts, it's considered a very low risk strategy, possibly like the lowest risk strategy. This and the covered call. the CCD strategy are the lowest risk option strategies that I'm aware of, or some of the. I hope that
Thank you.
answers your question.
Yeah. So especially does it limit the profits we can get? Yeah, obviously, so when the stock goes up,
Selling cash covered puts, no, I don't think it limits. It doesn't. Selling the covered calls can limit your profits, but the cash covered puts don't really. I mean, that's just like you either pocket your premium or or you have to repurchase the shares.
yeah, I mean comparing with like buying the stock outright and waiting it for to appreciate.
Yeah, I mean it's really depends on the situation. But typically it's a pretty solid and low risk strategy. So I do like it a lot, especially in a bull market and well only in a bull market and especially as a way to realize some extra yield at a low risk. I think this is the right strategy.
Yeah, that was my exactly my thinking as well.
Okay,
I
good.
Because the volatility always makes me kind of like I
I
yeah
understand. Good. Okay. It's a good thing. I'm glad to see that we're on the same page. Good,
thank
Christian.
you.
Thank you. Okay, let's move on to some more questions. Okay, so who's next here? Let's see. Well, on the topic of chips, can you share your thoughts on Intel and TSM for future? Okay, so good question from Nick here. So yeah, Intel. I have mixed feelings about Intel because I've owned it in the past, of course, and on many occasions, and it's done well and it's done poorly. But if you look at Intel, like over the last 10 years or so, like the stock has done really poorly. So it's basically I view Intel as it is. It's a chronic underperformer. Now, even in this AI age, and even with its multiple advantages and its size and scale, and its all of its government contacts and advantages, and all just all that, it's still underperforming, and um, it's still unable to really compete with AMD and with NVIDIA. So, I don't, I'll be honest with you. I'm not a big fan of Intel here. I know that it had a good spike, and it had a better than anticipated report. But this is not surprising. We've discussed Intel and we've talked about it, and I said on several occasions that in the near term the stock has a high probability of moving from 20 to 30, and that's probably what it's doing. But the question is, what's it going to do when it gets to 30? Maybe it'll go to 35, maybe it will go to 40. But I think the upside on Intel is, it could be kind of limited after that, unless the company starts showing some concrete improvements in its execution, in its products. It's got to start innovating again. It's got to show something because right now it's still behind AMD in CPUs, and it's behind NVIDIA basically everywhere, and its enterprise business is it's not expanding as well as it should be. So I mean Intel it's got some problems. So I'm a little bit skeptical on Intel here, especially in the intermediate and long term. In the near term, I think it can probably go to 30. TSM, TSM, I like. I think it's got it's the most significant chip producer in the world. I think it has a lot of prospects. But again, I think there may be some some better names in the chip space. I like American. I like the American chip makers. I like, again, I hate hammering down on AMD, but AMD, NVIDIA, Broadcom is a great company. I mean, that is an AI leader right there. So Broadcom, I think you want to be looking at Qualcomm here. This stock has come down a lot. It's really cheap. I mean, if you want to talk about a dirt cheap chip stock, just look at Qualcomm. I mean, this company's cheap, and I don't think it's cheap for a good reason. I know it's in, I know there's some concerns of a slowdown. It's in the mobile space. There's like a possible slowdown, but I don't, I think I really think that Qualcomm can surprise. Um, if not in this earnings, next earnings report. And really, I think Qualcomm stock is very cheap here. So I like um, I like maybe these companies more than TSM. TSM is massive. It's good. It has momentum, but again, we don't know exactly um, what's going to happen with TSM in a Donald Trump White House scenario if that occurs. We don't know exactly how that's gonna turn out. There's also the geopolitical risk with China, so I'm a little bit skeptical on TSM from this perspective, but it's a great company and of course one of the great chip makers globally. So I like it from that perspective. I kind of have mixed feelings about TSM, I guess you could say, and there's a reason why it's not in the all-weather portfolio. Okay, so some more questions here. Um, um, So let's turn back to the room, and we still have about 20 minutes here for our conversation. And I mean, there are a lot of people here, so I'm surprised we're not hearing from more of you.
So, Victor, can I ask one more question on NVIDIA? You
Yeah,
already
please.
briefly touched on NVIDIA.
Yes, yes.
So, how do you see it? Like, see, I sold some of the NVIDIA when I personally messaged you and you recommended reducing the percentage. So, but I can't sell more like because of the tax implications and I I want to defer selling some of NVIDIA to next year. So, how do you see it? Like, is it, I mean, another 3 or 3 to 4 months holding Nvidia and selling. Is it a good idea, or is it better to sell now and pay some tax to reduce the percentage of
Okay,
Nvidia in the
good
portfolio?
question. Good question. So I think if you're facing these issues, well, first I want to just say that I'm not an accountant. I'm not a tax professional. So for any tax related questions, it's of course much better to ask a person who is a certified accountant or things of that nature. But I can of course give my perspective. So regarding NVIDIA and selling it. So, I mean, if you have tax implications and you don't want to sell it, so this is my view. NVIDIA has an earnings report coming up at the end of around the end of November, I believe. So, there's likely going to be increased interest into this earnings report because there are high expectations. There was very good guidance into this report, so the market's going to be very curious if Nvidia can basically do it again, surpass the results and provide better than expected guidance, and it probably will. Now, as far as the stock price, we can probably see a bit of an appreciation into, once the election passes and we have kind of, I guess, the green light. Maybe Nvidia can go to 100, 60, 170, possibly $180 in like a bullish case scenario. Now, around the earnings report, if Nvidia is around 180, it's going to be tough to get an extenuation of that rally to, to 200 or whatever. We're going to have to see like just like an astronomically stellar report, which may not materialize. So, looking from this perspective, we can probably we could potentially see a sell the news event, around the end of November when Nvidia reports. Now, of course, this is not guaranteed, but it could happen. So that's just something that you should potentially factor into your equation. Now, as far as after that, if we get some volatility around the earnings, um, we could potentially see like a 10 or a 20% transitory sell-off in Nvidia. But, I still think the report is going to be very strong. So in any case, the stock will probably get a strong bid, and then we could even see a higher result at the end of the year. Maybe Nvidia will be at 180 to 200 by year end. It's possible, in my view, maybe even probable. So, I mean, that's kind of where I'm at on Nvidia. I guess I hope that answers your question.
Yeah, it does. Even I was looking at one of the video recently where Jensen was mentioning that they have insane demand for Blackwell, and it's ramping up good.
Insane demand, insane demand. I mean, these reports out of Nvidia, like I wrote about this. These, like when Nvidia, when I heard, when I saw the stock skyrocketing, I thought maybe it was hype. Maybe this AI, I was skeptical about it initially. I thought that, there could be hype here. But when I saw these Nvidia results, wow, I mean, these were like the most amazing results I've ever seen. And I've been looking at financial results for like over 20 years. Never, ever have I ever seen anything like what Nvidia was posting in early, in like early 20, like around mid 2023 or whatever. Just phenomenal. And the company is continuing to post these phenomenal numbers, and it's just like, and I look, I monitor the margins, and they remain just like very high, but not high in a bad way, high in a good way for now. I don't think it's sustainable. It's not sustainable in the long term, but it can be sustainable for for maybe, for maybe another year, maybe 2 years, who knows? But just the profitability level is just and the demand, it's crazy. So we want to ride this Nvidia train as long as we can. So for now, we're seeing it. I think we're gonna see like a negative report in Nvidia, and then that could like mark the top in the whole market. But when that's gonna come, I don't know. So we're gonna keep an eye out for it.
Yeah, sure. Thank you.
Okay.
Hi, Victor. I have a specific question about SMCI. I
Yes.
was stubborn enough not to exit my position when you did, and I'm now currently minus 50%. Not a big deal. It's a small part of my portfolio, but this is more a question about specific actions on how to proceed here. So they obviously have this conference on the 5th next week. Obviously, they have some idea to give us a preview of earnings of the next financial period. So would you advise to exit immediately or wait next week for this preview, then expect some maybe they can regain some of these losses and only then exit? What's your advice here?
Okay, so good question, and I'm sorry to hear that you're in the situation with SMCI. It's unfortunate. So SMCI, I was I was conflicted about the stock in the beginning. I saw the low valuation. I was a little bit initially this was it was I was puzzled why the valuation was so low, and this was a long time ago. This was maybe like a year ago or something. The stock had a low valuation relative to its growth rate and things of that nature, so that's why I purchased the shares. And of course it was in this AI discussion, and we saw that it had the good servers for for the AI. We had, the liquid cooling and everything. It was I mean, it's cool. It's good stuff. Good product. So I got into the stock, and it, like shortly after, it like like tripled or like quadrupled. It was just crazy. So I got in at like 250, I think, or like 200, and then it like shot up to over 1,000. And it was such a wild ride with SMCI. And then we took big profits on it, and then I left part of the position, and I had it on for a while, and then it kept like going lower and lower, and I started becoming more and more skeptical on the stock. And then I had like a smaller position, and then the news came out about the investigation, and that was definitely like the last straw for me. I just said, um, I'm out. There's no need for me to have this kind of risk in my portfolio. And and the reason I pulled out, even though it was like, many people are still debating whether we should stay in the stock or not. But I've witnessed like similar investigations before, and I can tell you from experience that they usually don't lead to good things. So, um, and again, this situation has to do with accounting, and accounting is like the most serious thing, like one of the most serious things that you could ever have in a company is some kind of issues with the accounting. Now, as soon as I heard this, of course, I recognized that the risk was too high, and there was no need to take such risk. But I realized that some people maybe didn't recognize the risk, or stayed in the stock for whatever reason, and like now, don't know what to do. So it's difficult to give advice here. Um, I can say what I would do, and I would just book the loss and move on to another stock. And I would do this for several reasons. The main reason, I guess, is the question that I always ask myself is, do I need this risk in my portfolio? Like, why do I need this company in my portfolio? Is it going to go from $40 to, or whatever it is, $25 to $250? Is there a high probability in this? I don't know. I don't see it. I think that there's a high probability, honestly, that they uncover something very suspect, in their accounting practices, and potentially bad things lie ahead for the stockholders. So I mean, that's kind of my view on it. Um, as
Right.
far as the upcoming earnings, I understand. That maybe, if there's some positive news regarding earnings, we could see some recovery in the stock. But this shadow of the investigation, it's going to continue to hang over any kind of positive news in the stock. And unless we hear positive news on the front of the accounting investigation, like the authorities say everything is fine with the accounting, which is, who knows how far away that is, and if that will ever happen. So until I hear, the SEC say, or whoever's investigating them, that it's okay, you have the green light, to invest in SMCI, their books match, what we think should be, and their accounting principles are not, wild and crazy. I have about, I think they're doing something with their accounting that is wild and crazy, because you usually would not see um, accounting firms resigning, and you're not going to see investigations by the government, and just for no reason. So I'm very skeptical on what's going to happen with SMCI. I have no idea, you know. So I don't want to be invested in a stock that has so much uncertainty.
Right, right. Yeah, I was just looking for the best exit strategy. I
Best
absolutely
exit point. Mhm.
don't intend
So,
to.
okay, just my view here is that as long as you recognize the risk, and the risk being that there is an active investigation, that the accounting firm representing SMCI has resigned, as long as you recognize that this risk exists and it's a significant risk, and even though you plan on holding the shares in the relatively short term, you still need to recognize that this risk exists, and the potential risk is that the principal may disappear. Basically, that's the bottom line. As long as you recognize that risk and you're prepared to take it, there's potential for some redemption in the stock if some good earnings news comes out. Yep.
Right, so I'll wait until the 5th, and then whatever happens, even if it goes to zero, I'll just exit.
That's the risk. And of course, there's a low probability that by, in a few days it's going to go to zero. That's a low probability event.
Still, yeah. Okay. Thank you. Thank you.
You're welcome.
I would like to ask, what are your exit criteria? And I noticed, since I'm a new member of the group, I don't see you put any stop losses. Are there mental stop losses, or especially the relationship between entering a stock and exiting a stock, and again, when you recognize your mistakes?
Yeah, I mean, that's a good question, and we all make mistakes from time to time, of course. No one is perfect. You're always going to have some winners and some losers in the portfolio. So my view on stop losses and things of that nature, I'll be honest with you, I don't use them often. I use them in some cases. I view them more as short-term trading instruments, swing trading instruments. So I'm more of an investor, intermediate, long term. Sometimes, sometimes I'll do some trades, but it's really mostly intermediate and long term investing. So I really don't have the need to use stop outs in many cases. Having said that, they are preferable in some cases, and I wish that maybe I use them more in some instances. This pertains to primarily to higher risk positions and high volatility periods. I think that we can incorporate more stop losses and things, things of that nature when the market becomes more volatile, so and also with the more volatile individual stocks and things of that nature, we can implement more stops, and I think that probably we should be using them in some cases.
And the other is, when you recognize you made a mistake and you say, okay, I thought this way would happen, but now I'm wrong. What are your criteria for exiting a position?
So, I mean, of course, we try not to make mistakes, but a mistake being, do you mean like a mistake in terms of a position?
Performance.
Okay, so like, so I mean, it comes down to, I guess, just if it's a poor company, that performs poorly, and it somehow it winds up in my portfolio. If I'll recognize it as soon as possible and cut it. I think maybe an example of this would be the recently I had this stock OUST, Ouster is a company. It's a LiDAR company, with the radars for the cars and
All right, yeah.
and that sort of thing. But so I purchased it. I did some research on it, and I saw that the stock had a high probability of moving higher. But then after purchasing it, I realized that the company was doing too much. It was doing too much dilution. It was basically selling too much of its stock to, issuing too many new shares, and it was losing too much money basically. So I realized that here potentially I made a mistake because there's a chance that the stock could go lower than I intended. So, just getting rid of the position as soon as possible is probably the easiest and best cure for making a mistake. So basically just correcting the mistake as soon as possible.
Okay, thank you. I did exit the OST as well, just the day before you exited.
There you go. So good. Okay, guys, it's been an hour and a half, so our Zoom session has come to an end, sadly. The time went by really quickly, and I just want to thank everyone for joining. We actually have a good number of people. We have about 30 people here today. I know that only several of you have participated. We've typically seen questions from many more people, but that's okay. Maybe some of you are shy here today. Maybe some of you are busy with the market. I understand. It's okay. I think we had a really interesting discussion. We covered a broad range of topics, and it was informative for me, and I hope that it was informative for you guys as well. And I want to thank you for being a part of the group and for joining us today in the Zoom session. And I think we should do this again soon after the election. This was kind of the pre-election session, and maybe in a month or so we can meet and have a post-election session and maybe discuss some of the performance in the first month of the new administration. So we'll see if we can arrange this. Thank you all for coming.
Thank you.
Thank you. Bye.
Thank you, Victor.